So over the past couple of months, I've talked about how I've built out my small cap positions, and with my mid cap companies almost built, I can now place my focus on large caps. And this has worked out beautifully in my opinion, because while many of the companies I'm investing in have appeared to hit bottoms, many of the large caps could still fall some more, which makes this an excellent time to start buying them. Now, Google is one of the largest companies in the entire stock market, and while many other companies have fallen much more, this company is still being talked about as a stock that investors are buying. So in this video, I want to share my thoughts on Google and whether or not I think this is a company to buy. But I don't want to waste your time, so let's go ahead and dive right in. When we look over the past year, Google is down over 35%, which in comparison to companies like Meta and Tesla is nothing. But even still, you need to go back 2 years to see Google at these prices. But despite the massive drop in share price, some people look at this company and they believe the company is not going to grow, they are hiring too much, and they are handing out too much stock-based compensation. Plus, with a valuation over $1 trillion, some people believe there is plenty of room for this company to fall, especially given the fall of the other large cap companies. So let's go through these points and really get an understanding of what's actually going on. So for a quick overview, Google has several different businesses. They have the top 2 search engines in the world, which are Google.com and YouTube.com. They also have their Google network, consisting of AdSense, which shows ads to visitors on a website, and AdMob, which is similar to AdSense, but instead of websites, it's apps. And the last business is their Google Cloud. Now, when we look at revenues, we can see that clearly Google Search is their largest segment of revenue. Now, one of the most common arguments against buying Google is because of the recession, ad spending is going to be lower, which means less revenue and profits for Google. However, when we look at 2008 and 2009, this was simply not the case. In fact, we saw gross profit growth exceed revenue growth. And speaking of 2009, at the beginning of that year, Google said that they are scaling back on some projects and cutting jobs as a result of the need to focus more closely on core businesses. And this is something that we have seen with Google recently. Even though we haven't seen massive job cuts, they are scaling back on random projects and putting their focus on their core businesses, which are Google Search, YouTube, and Cloud. And what will this do for Google over the next few years or so? Help them improve profits, especially if they begin to cut some of their workforce. And this is something that the Google CEO already hinted at in September of 2022, saying that he hopes to make the company 20% more efficient. One other common argument for not buying Google is their stock-based comp. And even though they are spending a lot of money on hiring and stock-based compensation, we need to understand where a lot of this dilution is going. They are investing a ton of money into their cloud infrastructure, which has a tremendous market opportunity. And I want to compare this to something like Meta, because I know several people, including Jeremy from Financial Education, say that Google will fall like Meta if they don't cut their workforce because of Wall Street. And I believe there is a massive difference between these two company situations. The question that I have to ask is, where was Google and Meta hiring? Meta made this massive switch by becoming focused on the metaverse, a sector that isn't fully developed and hasn't proven to be viable for the company. So when investors saw that Meta was hiring and throwing a bunch of money into a possibility rather than the businesses that have brought them to this point, many people didn't want to invest in this company, and so the selling pressure was massive. Google, on the other hand, is investing money for the purpose of expanding their already proven businesses with the emphasis on cloud. Now, I'm not saying that Google won't fall anymore, but we need to consider where companies are investing their money and the probability of these investments coming to fruition. So let's look deeper into their cloud services. There are 4 different areas that Google focuses on when it comes to cloud. First is Data Cloud, which provides companies a data warehouse which contains structured data, a data lake, which is raw and unstructured data, and machine learning tools in one integrated platform which can get intelligence from their data. Second is their Infrastructure Cloud, which consists of public and private clouds, as well as a hybrid cloud, which would include both private and public. But they also have Edge Cloud, which basically is capturing, processing, and analyzing data locally. Third is the Collaboration Cloud, which includes Google Workspace. And lastly, their Trusted Cloud, which provides an integrated set of tools to protect their data, applications, and systems from cyber threats. So when you think about all these different aspects of cloud, are any of these segments really going to stop growing over the next decade? It is highly unlikely. And in fact, the cloud sector is expected to grow massively in that time. Now, there is one thing that I think think many people probably aren't seeing, and that is Google's presence in India. There is a high likelihood that India could become the most populous country in the world this year. And in July of 2020, it was announced that Google is investing $10 billion in India over the next 5 to 7 years. Here are a few areas they are planning to invest their money. First is enabling affordable access and info for every Indian in their own language. They are building new products and services that are relevant to the needs of India. They will also be empowering businesses as they continue to grow on their digital transformation. And lastly, they will be leveraging technology and artificial intelligence for social good in areas like health, education, and agriculture. Plus, with Apple moving a lot of their newer production to India, it's clear that the country is primed for tremendous growth over the next decade. In fact, according to industry estimates, India's consumer digital economy is expected to grow to $800 billion, which is 10x growth from 2020. Think about that for a moment. This is an entire country's digital economy growing 10x in 10 years. That is incredible to think about. So for Google to invest a lot of money into India is perfectly fine with me. Now, one of the areas that I believe Google will continue to invest their money is Google Cloud. The growth that we are seeing from this segment is outstanding, and in fact, it is outpacing AWS growth by over 10%. Now, I know the product is not exactly the same, and AWS is much bigger than Google Cloud, but the argument that Google doesn't have much growth left is clearly not the case here. With that said, this segment is only about 10% of the overall revenue, but I wouldn't doubt Google Cloud continuing to become a bigger part of their revenues moving forward. The other thing that I will say that is incredibly important is that with all the investments made into cloud, because of the growth potential, they do have a negative operating income. Now, I personally don't expect this to last, but as of right now, Google Cloud is not contributing to the overall income for the company. We know that Google is most known for their income, and even though they don't have revenue numbers like Amazon, their net income is outstanding. Well, what is going to happen when Google Cloud starts generating positive income? We know how profitable these kinds of segments can be given what we've seen from AWS. And so what will happen to Google when their cloud product grows and they turn it into a profit machine? There is definitely great potential here. Now, let's try to think about this mathematically. As of right now, Google Cloud has about 10% of the total addressable market, with Microsoft and AWS leading the pack. It is estimated that the cloud sector could grow to be over $1 trillion by 2030. So if Google Cloud even maintains 10%, they would have $100 billion in revenue in 2030. And with AWS having operating income touch 30% last year, Google Cloud alone, not including Google Search, YouTube, their Android business, but Google Cloud alone would have $30 billion in operating income. So this shows the potential for Google Cloud. We can say that Google Search is dead, but the reality is that their greatest potential isn't found in search. Cloud is going to be key for them over the next 5 to 10 years. And this is not even including YouTube, which I don't think many people understand the potential for this segment either. I mean, think about it this way. YouTube is the largest platform that includes long, medium, and short form content. And when you think about all the different platforms that are offered to content creators, the one that supports creators the most is Google. Now, you do see similar content across all three platforms, but when you think about the place where creators want to post the most, many of them will say YouTube over any other platform. And because Google provides great support for these creators, you will not only continue to see content on YouTube, but advertisers will also want to remain and move to the platform. So I wouldn't doubt over the next few years, especially after the recession, we will see YouTube numbers grow. Now, with all these things, is Google actually a buy even though it hasn't fallen as much as other companies? I think it really depends on how you view Google's potential growth. If you don't think that they can maintain their market share in cloud and YouTube won't grow much more from where they are, then this valuation is okay. Personally, I see tremendous potential not just as a business internally, but I see a lot of opportunities that Google can capitalize on going into 2030. And this is why I'm not only buying Google, but this will be my first large cap company. And if you're interested to see more large cap companies I will be buying, make sure that you subscribe to the channel. Hope you all enjoyed this video, and I'll see you in the next one.